Welcome back to Trading 360. I'm Nicole Petallides. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts, and here to take us through the trades is Mike Shorr, Director of Trading and Education at Prosper Trading Academy. Good to see you both. Thank you so much for being here. So Mike Shorr, I know you had looking at Disney. So many folks were looking to Disney for reopening trade and subscriber growth, but it hasn't quite been the darling it was. Tell us a little bit about Disney.
Yeah, this is going to be one of those ones where you get to these in a lot of these stocks where now we're looking back at levels that we haven't seen in a long time. So where do we dip in? And if things turn around, what are your stocks that are going to probably rebound best off of that? So now this has become much less of a COVID story and a reopening story, just as overall market uncertainty with this one. So I'm playing off of these lows that we saw in the beginning of February with this one.
Okay, so you understand that, right? Ben, tell us a little bit about that. He's watching those February lows. Are you watching the same levels?
I am. Hey, Mike. Hey, Nicole. Nicole, one of the things I've been keeping an eye on is the broader base market relative to the January lows and some of the price activity we saw February versus some of these individual names, these stocks that we look specifically at. And I think anytime you've got a stock similarly to what we've seen in terms of Disney that in February held above the January lows, I think you're in a good situation, and it's a win for the bulls in many ways. But I think we're still struggling here in ticker symbol DIS, and let me show you why. First and foremost, I wanted to just kind of zoom in on this hourly time frame here and the move that we've seen recently off the $162 level. We're talking topped out there. That was the beginning of February, all the way down recently to 136. And again, we're just recently into these lows, taking out recent lows around 140, and have really yet to look back. So no rejection of these lower levels. Now, I want to get back into that chart we were just looking at here, because as you add a little more time to this, we're still in the hourly candles, but this is the move that we just looked at from 160 down again to 136. But we've got a pretty well-defined upper extreme here around 179, 180, and a lower extreme. And again, I just want to point out the February lows were unable to take out the January lows. So again, a bit of a win. As we take a step back from the hourly time frame here and just join me as we look at the daily, you can see we're below the 50-day moving average as of last week. We held below the 200-day moving average basically since that retest of the 9th of November. We broke down below it, if you remember, in September of last year. And then again, this is part of the bigger move off that 203 high. The one thing that concerns me is we've seen RSI, again, in oversold territory a couple times on this move lower off that all-time high up around 203. And you can see again how we have some room to go here potentially to the downside. So I'd be keeping my eye again on that January low. I'd also be watching for some volume to come into play. The weekly doesn't really provide us a lean one way or the other, but here you can see again an upper extreme 203, a lower extreme of 80. Should we take out that January low, it would open up a door for a retest of that lower level down around $79, $80. So again, the weakness that's coming into play here, it really is yet to shrug off some of the unease, some of the unknowns. And again, as mentioned, though, compared to the broader market, though, did pretty well hanging out up above those Jan lows.
And as we look at that, right, the earnings, we saw some good news within the earnings, right? So now you start to wonder which way is this headed. So Mike Shorr, as you talk about your trade on Disney, reiterate what levels you're also watching.
Yeah, so I'm looking at, and now, with things opening up today, we're either going to get to a much higher credit on this, or we're going to roll our strikes down. We put these together before the open. But this is going to be one of those ones where this isn't necessarily, it's bullish in nature, but it's more of not bearish, where I'm just playing that if we get a relief of some sort in the overall market, which is done, what does Russia have to do with Disney? Not a lot. But the market is, as a broad, is going to at least stop this bleeding. And so this is a play of a not bearish as opposed to bullish. So I'm playing off of those lows with the credit spread.
Yeah, understood. Mike, do you think that'll expand into other names, whether it's reopening or the market overall, which has had so much volatility in selling?
Every time that we see something that and I'm talking very, very short term, but the market does want to, there's a lot of money waiting. There's a lot of stocks that everybody's like, oh man, if I could only buy this at this price. Well, now you do. Now what are you going to do? Now it's scary. So that, I don't care if it's to the downside or the upside, you're either selling new lows or you're buying breakout highs, which is very, very difficult, which is why you're kind of seeing the volatility that you're seeing. I don't think anybody, including myself, wants to get married to anything for a very long period of time here.
Right, understood, yeah. Let's get to the next one, and that is Las Vegas Sands. Similar but different?
Yeah. So, this one I'm gonna play to the bear side just because there is a lot of expectation now that we're through the Super Bowl. Now we have March Madness. If those numbers start to roll in poorly, well, then there's your fundamental story to go along with that. And the technicals are just not very good. So that'll be my bearish play on something that not only is it being pulled down by the overall volatility that we're seeing, but a possible bad fundamental on top of the technicals that we talked about.
Right. So a different picture than that of Disney. Still, it could be a reopening trade to a certain extent, but a different picture when you look at the fundamentals. Tell me, Ben, what are your thoughts when you look at Las Vegas Sands chart?
Well, a similar situation in terms of some of the recent selling we've seen, and no indication that it's stopped, no V-bottom, no real even sideways consolidation to speak of at this point. We just continue to probe lower levels, recently back down below the $40 level, and at 39, we're down 4.33% here this morning. So let's dive into the charts, because I do want to point out here that we've been really struggling to take out anything significant to the upside. Any attempts we've had to rally have been just met with sell-side activity, and as mentioned here, we continue to work our way lower. Now, I want to point out also that 33 is a key level, and we bounced off that in December, if you remember, started to rally back up to 48.50, but since then, we've come off. And again, just want to point out this is one of those stocks that did hold up above in February, the January lows, but as you can see, we're working our way down below the February lows right now. And again, those Jan lows are down around that $35 level. Now, I want to point out here in terms of key levels to the upside, as we look at the daily time frame, you can see that, well, we're now just below the two moving averages. We like to watch the 50 in the purple, the 200 in the purple, I should say, 50 in the blue. Similar situation in terms of what we were just looking at with Disney. The RSI has some room to expand to the downside. Volume's been somewhat limited here, but we were just talking about how it's struggled to get anything going to the upside, recently failing up around that $47, $50 level. You can see on the way down from 74, we peaked out 65, we maxed out, and if we roll back over here and open up the door to the downside, I'd be looking at these lows that we saw, again, March of 2020, pandemic lows we're talking about, down around this $33 level. This is one of those stocks that's given back a significant, well, all of its a recent run up here. Take a look lastly at the weekly time frame, and you can see again, giving back its recent run up that we saw into the $90 level, and I'd be keeping close on these lows here, down around 33 again. You can see how we found support there going all the way back to 2010. If we open up the door to the downside there, could see some energy here in LVS. Again, continued weakness, no real indication that it's slowed at this point, nearing key support, but lower highs here throughout the process.
Yeah, I think it's interesting bringing that relative strength index in too, right? It really shows how the pressure's been on. It's really not stabilizing or finding bottom. Tell me, Mike, your thoughts.
Well, the other thing that we didn't talk about was we do have a China back pocket trade with this too. That, China, even though they've kind of tacitly nodded at this Russia thing, they have other problems, and they could get sucked into this thing the same way that the U.S. can. And of course, Las Vegas Sands has a lot of exposure over in China, mostly due to Macau. And if those start to ramp up, or if Chinese production starts to slow down, as kind of their numbers over the weekend kind of hinted to, then you have a snowball effect on that too. Just another thing to have in your back pocket.
Yeah, right. With the Macau trade as part of the Las Vegas Sands story, right? That does bring a wild card. A final thought on that trade, Mike. I think we just showed it, but just any quick final thoughts on the trade before we get to the next name.
Yeah, just a put calendar here. 110 put calendar, regular March versus regular regular April versus regular March. That was trading yesterday, or on Friday, it was trading around $1. Now with us being down like 4%, it's trading a lot higher than there, but look for a retrace, and then you still have the same sort of thing because you do have some really good resistance up there with the confluence of the 20 and the 50 moving average too. That's going to give you a cap, at least in the short term.
Yeah. Okay. And last but not least, looking at CVS Health, you know, there are a lot of folks who thought healthcare or anything health related may be the way to go for 2022. Your thoughts, Mike, as you're looking at this trade?
Yeah, you know, strictly, like I said, it's really hard to get married to something. So, you know, you have to be kind of safe with things. And like we said, healthcare is one of the things. Usually energy, if you want to go and buy energies at these levels, well, good luck with that. I mean, I think you have incremental gains in front of you if you are even right. But CVS is actually at a place where it's a decent place for a long, where I think kind of that it kind of just either goes sideways here if things continue down, or that could be one of those ones where it just goes up with the market. But I think it does have a little bit of embedded put in it just as just the sector that it's in. So I was looking for something safe, basically, if there is such a thing in this market.
Right, and that's what I was saying. People were looking to that group as something to be a little safer than some of the high-flying risk plays. Tell me, Ben, your thoughts.
I think we're seeing that. I'll show you on the daily when we look at the 50 and the 200-day where we are relative to those moving averages. But I'm glad because seems like we saved the best for last here. And CVS has done pretty well considering. And even today, they're up 0.75% here right now as we speak. You can see the trend environment to the upside that's coming into play and how they recently found support around 100. This is the hourly. And I'm looking at this kind of bottoming pattern that's forming here right now. This area is consolidation. It's very healthy in terms of the recent move up that we've seen again from 86. We saw beginning of November, end of October, all the way up to that $112 level. And we're kind of recently trying to attack that level again. I did want to take a step back from this hourly time frame and just show you that CVS on the daily, as I mentioned, back up above their 50-day moving average. This stock hasn't been below its 200-day moving average since November of 2020. You can see we were just talking about that bottoming pattern that's forming in terms of, here's as you step back, kind of a look at that right now as we try and investors try and work their way back up to this 112 level. But look, RSI in this instance, we were talking about two names a minute ago, Disney. We were talking about Las Vegas Sands and how they had room to go to the downside. Look, the RSI is actually pointed north in this instance, right in the middle of the range, so potentially some room to run here. Volume's kind of limited in terms of relative to some of the bigger moves that we've seen to the upside. But I did want to point out, again, as far as that bottoming pattern that we were just talking about, here's a look at it again on the daily time frame. But here you can see a very similar situation on a bigger picture weekly time frame, showing you how, again, after running up to 113, they bottomed out around the $50 level, found some support, and since have doubled off those lows from 2019, 2020, and on the way up. Investors, the bulls, want to see this one take out that 113.65 level. CVS, though, again, a reflection of that sentiment you guys were just talking about and how investors feel a bit safe in this play and holding this name relative to the broader market and some of the price activity we've seen.
Yeah, I think you make a great summation there, Ben. Final thoughts, Mike, on CVS Health?
Yeah, I would play this as this would be neutral to bullish. So that with a call calendar, 110 call calendar, that you know, if we sit here, you're going to get the decay from the front month decay. Implied volatility, if we go down, is probably going to go up. So you probably have a little bit of a buffer to the downside. So just in general, that's the I'm leaning to the downside, or excuse me, to the upside, but still with a little bit of embedded protection on this trade.
Yeah. CVS Health, Las Vegas Sands, Disney, some great trades today in the big three. Thank you very much, Mike Shorr of Prosper Trading Academy, and Ben Lichtenstein, our own Ben Lichtenstein, looking at the charts every day with us, host of Futures here on the TD Ameritrade Network. Thank you for the big three on this Monday.